Okay, let's have a serious conversation. I want to look at the market again from a logical perspective. I'm not going to make this video fluff. We're just going to get directly into it. I do want to show you this one chart here, which is really important for people that diamond hands. We've been talking about it in FS for the past week or so. Johnny had found a chart that really showcases the true importance of being able to protect yourself from the downside of the market. So a lot of people think that if the market drops 20% and you're holding a cryptocurrency that dropped 20%, that when the market comes up 20%, you just made your money back. But this is not the case. You have to think about it. They're on different scales. So, for example, if you have $100 and you go down 50%, right? The most you can go down is 100%. Okay, you can't go down 2,000%. It's impossible because it would be like negative, right? But you can go up 2,000%. So when you're looking at the price of an asset, they're on different scales when you're going up and down, right? So if you look at the math here, right, a 45% loss will, you have to have about an 81.8% increase to get back that 45% loss. Okay. And this is a big thing that a lot of people are missing that they just don't understand. Diamond handsing, okay, it's not the worst thing in the world. You could be a long-term investor, and there's a time and a place for that. And I'll tell you, how I would trade in the market if I was an investor. I am mostly an investor, just to be clear with you guys. But I think the big pivotal change in my recent decision to sell the majority of my cryptocurrency is because I have other things I got to pay, like payroll. I have other people's livelihoods. We have like 25 people on the team. So if I just diamond hands to infinity, I'm going to be reaping these big losses, and it's going to be harder to come back. So just pay attention to this, the math of recovery from a portfolio loss. You have to understand that the percentages downside are way worse than the percentages upside. And I wanted to make that clear to everybody to kind of set the tone for this video. If you appreciate this high quality information, do us both a favor, like the video, subscribe to the channel, and then of course share this with somebody that needs to see the kind of the flip side of the story, because everybody's like ultra bullish right now. If they have more than 300K subscribers, they were likely telling you bullish news, and it's because they get more followers and they make more money. So they are literally incentivized to just ultra bullish to the end of infinity. Everyone in crypto is basically using their social currency to try to say the market's going to bounce back, but yeah, everyone's scared. If we look at Bitcoin's price, you can see exactly what we predicted. It just didn't come up to this point, but there's a reason I sold the majority of my cryptocurrency. It's likely that we're coming right back down to 30K, which would be right around this range that we saw here back in the June dump. So at this point, I'll reevaluate what my thought process is, but after looking at the market pretty deep, I think there's going to be a bounce for sure. So I'm going to make money on that bounce, and I'll let you know the exact coins that I'm going to buy. And towards the end of this video, I actually have a very interesting altcoin that might be very lucrative on this bounce. So, we look at Bitcoin to track the price of everything, like to track the movement of the market. We look at Bitcoin. But I'll buy an altcoin on this bounce. So if we come back to this 30K level, I'm fairly confident that we're going to have something significant to the upside, whether it's going to be a complete market reversal or just a nice little bounce. There's going to be money made here. So some of those losses that you might have accrued by diamond handsing we could come back. So I don't want people to get emotional. I see the comments. Everybody's emotional. I get it. And I'm not trying to I'm just giving you guys my honest perspective on the internet. The people like to isolate things like, hey, Alex, you're calling for 100K Bitcoin. And yeah, my mind changed. Whip-de-doo, I'm a human. I'm a human. If anything, you should probably, the people that just consistently say the same thing over and over again. And even though the market's dumping, they continue to say it's a bull run and never claim they're wrong. Those are the people you should be scared of, right? I'm literally telling you that I'm wrong, and I pivoted and switched, and that pivot has saved me a significant percentage of my portfolio, a significant percentage of my portfolio. Now I'm in a position to be able to buy this dip when it hits the 30K BTC and make all the losses back that I accrued from the top here, right? From this dip down to here. So again, guys, just remember, I'm admitting I'm wrong. And this is something that everybody should do with themselves, right? You shouldn't lie to yourself over and over again. especially when you're incentivized for views and subscribers. And I think this is really important. Also, if you look at stocks and everything that's going on, I mean, pretty much everyone's freaking out. It's not a cryptocurrency thing. It's very risky right now. And you know, we have Facebook going down 15%. You know, we have Netflix down a significant percent, 39%. We have PayPal down. This is like really scary. Like, this is no joke. 58%. That's like really, really scary. The stock market world is like looking like it's coming to a crumble. And then we see Google obviously having some volatility as well. So in general, like, why would you want to hold the riskiest asset class, which is a cryptocurrency, while everything's panicking and freaking out, right? Everything's on the downturn. So this is not a position you should put yourself in. You know, I was talking about it in a live Q&A yesterday in Fantom Secrets, and I do want to comment on it. It's not really about the decision, right? So, like, for example, if I made this decision right here and Bitcoin went up, right? Let's say I was wrong and Bitcoin just skyrocketed to the top or whatever. Well, it doesn't matter because it's the cumulative effort of the decision that's important, right? So in this case, there's so much risk that the obvious answer is to de-risk. You have more downside potential than upside. So even if I was wrong and the market reversed to the upside, you know, this accumulative effort of me making, you know, the right decisions over time will allow me to make money. And this is how people stay consistent in making money. You know, last bear cycle, we had a lot of YouTubers that they couldn't help their audience because all they knew was diamond hands, bull run, bull run, bull run, right? And you know, I fell into the category of diamond handsing and following all of them, and then having to get a job and going broke because I had to, you know, literally realize not realize the loss, but I realized some of them to pay bills. I had to pay bills. And these losses were significant, right? We have literally, if you look at the percentage decrease of Bitcoin's price, that's an 83% decrease. That's ridiculous. That's ridiculous. There's literally no reason, you know, why you should have to deal with that unnecessarily. And again, bringing it back over here, if you look at a 75% loss, you need a 300% gain to get that back, right? So that's pretty difficult, okay? And 80% worse, probably like a 400% gain that you need to, you know, get back to make your money. So again, I don't know how many times I got to tell you guys, you know, you should pivot yourself to put yourself in a position to make the proper decision in both directions of the market. And this is not an emotional game. Somebody was like, oh, Alex, why don't you smile? I'm just being straight up with you guys. I want to give you the details, okay, to your face. I want to tell you the truth because this is how I'm thinking about it, okay? Sometimes it's not all smiley. Sometimes you got to get to business and make some money. It's as simple as that, right? There was also another thing I want to show you. This is information that you will not find on the internet. People claim that you can find my course details on the internet. You will not find this on the internet. Let me show you. I'm just going to zoom in a little bit. Very, very interesting. You know, Matt was working with some people in our group, and they decided to kind of look at the red horizontal lines, which is basically Fed raising interest. This is them printing more money, and then the green line is Fed lowering interest. This is them stopping the printing. Pretty much every single time we have the red, you know, Bitcoin's price increases. As you can see here, there's select few times where, you know, oh, actually not really. If you look at it, look, as you can see, Fed raises interest, and then we had this rally. Fed raises interest, and we have rally, right? Pretty much most of the time. But look at the green lines. Every single time they lowered interest rates, we have a dump, okay? And as you can, you know, can tell from what's going on, there's a good chance that they're going to lower interest rates. So he's looking at, you know, expected long liquidation target because, you know, they're looking to liquidate as many people as possible, and I'll show you proof of that in this video. But you know, this is the potential range that he thinks we can come down to. The worst case scenario with the macroeconomic conditions and the longs getting liquidated, we can get down to like $17,000 Bitcoin, 18, maybe $20,000 Bitcoin is not out of the question, guys. This is what I keep trying to explain to you over and over again, and it's not the end of the world, right? It's not the end of the world. And I think that's the beauty of what we're doing. And the fundamental secrets is that we make people feel a little bit at ease. Like, people think it's the end of the world when you sell. It's not, guys. It's okay. You can even buy right back. Like, if you sold today, you can buy back tomorrow. There's nothing wrong with that at all. So again, just remember, protecting yourself from the downside is more important than trying to get upside percentages, right? And if we're coming back down to 20K, I mean, you could see a significant, like, you know, down to maybe 20K right here. That's a 48% reduction. So the question you have to ask yourself, again, bringing it back to this chart, if we look at the 45%, is Bitcoin going to go up 81%? Okay, or 50, if it's going to go up 100%, right? Bitcoin currently is at 34,000, so that would be, up to 70K. Maybe that's the case, but again, I'm just losing risk to reward, right? 100K BTC, I think to me is out of the question, considering the fact that we have this major thesis that everybody thought was going to happen, and whoever the powers that be, whoever the big manipulators were, they invalidated that thesis. I'm pretty sure of it, just because of the time horizon. We should have already been at 100K BTC, and we saw this in the market structure here, and I laid this out in the last two videos, so you can go watch that. I'm not trying to talk about the same subject that I had in the other videos. So let's dive a little bit into altcoins, because I do want to point out something again. We talked about Solana having a lot of issues. I literally told you guys Solana was probably going to break, and it did break. And this is not directly Solana, but this is a token bridge on Solana. Ethereum to Solana loses 321 million in the largest hack in 2022. We're going to see this happen more and more, especially the fact that we're in probably a bear run. What's happening now in DeFi, and I just want to let everybody know and be very clear with people, there's a reason why I sold a lot of my cryptos, especially the highest risk ones, is simply because when DeFi starts to go down, there's going to be liquidity issues, there's going to be hacks. These guys are going to get desperate. Some of the anonymous founders of some DeFi coins are going to rug pull because they want to make money before the bear run hits, because they know that when the bear run hits, they're going to be like, they're going to lose liquidity. They're going to lose liquidity. They're going to lose transaction volume. It's going to be desolate. People are going to stop like using cryptocurrency just like they did last time. So they're going to do these desperation acts, like, these hacks and these rug pulls. So again, when it rains, it pours. Please, guys, please pay attention to what's going on. It will get worse if we do go into a bear run. And I just want to be clear with everybody. I'm not perfect. I don't call everything. I don't claim to call everything. I just claim to be a human being. But we did call that Solana was going to break in. Let me just find the video real quick. In this video right here, I literally called that Solana was going to have issues. So I try to prepare people for what's going on. I like being optimist, right? I like showing cryptos. I like talking about the market, but I also like being a realist, especially when the potential of the downturn is here. Like I'll be I'll be super optimistic, like right here, like right around here at the bottom of the market. You'll see me make these all out videos because I want to inspire people, because they're probably going to make money, but I'm not going to do it here. I'm not going to give you guys the Bitcoin's going to $1 million of, story, or sell some BS to you. It's just not going to, I'm sorry that you guys are mad that I'm not a perma bull all the time. Like, I'm a perma bull long term. If you look at it from the monthly or the weekly, this is perma bullish. Like, we're good. Don't get me wrong. But like, what do you want me to do? Like, you want me to come out here? Like, these videos are, I drop videos daily, right? I drop videos daily. So it's like, think about it, right? It's like, what am I going to daily tell you that daily the market's going to go up forever? Like, what do you want me, like, I'm going to run out of news. Like, I need to tell you the truth, right? The truth is, on the daily, on the weekly, we might be coming down a little bit, and then the market will reverse again. And I'm in this forever, right? You should look at like my time as confidence of the crypto. Like, I'm spending all my whole entire existence in this market. So it's just right now I'm trying to make money, right? Another piece of news that I do want to point out is that this is a big win for cryptocurrency with regulation. IRS says untraded tokens are tax-free. So this is like the whole staking problem or the mining problem that we were faced with, and they made that clear. So this is really good, obviously for the infrastructure of cryptocurrency, and I just wanted to point that out. So that's definitely a big win for cryptocurrency, and we'll see the effects of that over the long run. I also wanted to point out something else, right? This is a chart with Elon Musk basically saying, Bitcoin or cryptocurrency is going to moon. And pretty much every single time he has called this, there's been a dump. And we're looking at Dogecoin. And the reason why I want to point this out is because a lot of people are using their social currency to take advantage of you and use you as exit liquidity. So when there's new markets, right, especially in cryptocurrency, we consider this the wild, wild west of finance. There's pretty much no regulation. So there's like this rinse and repeat kind of a easy loophole to make as much money as possible. Now, for me as an analyst, I've been tempted There's been so many people have tried to come out to me and tell me, "Hey, Alex, you should do the same thing." But it's wrong. It's morally wrong to me, in my personal opinion, to use my social currency to manipulate people. So I would never do it. And this is why we don't accept sponsorships on this channel. And I have never been paid by anybody to talk about any coin ever in existence of my whole entire cryptocurrency career. I just want to be clear with you guys. There's a reason why I don't do that. People have offered me $50,000, $100,000 to talk about a coin because when I talk about the coin, people make investment decisions. Even though I tell you it's not financial advice, people do it anyways. And then the people that paid me take advantage of that, right? So we see this with Elon Musk. Clearly, every single time he talks good about whatever crypto, the market dumps. And we are definitely seeing this with Michael Saylor. I do not care, how permeable he is and how positive he thinks the guy has 2 million followers on Twitter. If you really think he's not taking advantage of this, you're crazy. He comes out right here, right? And I bet you I'm gonna make it one day. Like, I just don't have time right now. I woke up at 5 in the morning. I got other things I'm doing. But I will make a chart of every single time he's quote unquote bought crypto. And I bet you every single time there's a dump like immediately after. And it's because he's using you guys as exit liquidity. He has a social currency. He says bullish, bullish, bullish. Hey, everybody, it's again, the regulation's not in the market. They're taking advantage of it now so that when regulation does come into the market, this is not going to be able to happen anymore. A lot of YouTubers are taking advantage of this. A lot of people with big social credibility are trying to milk it in this cycle because once everybody wisens up and gets smarter with on-chain data, because on-chain data is showing this now, they're going to regulate it out of existence. So they're trying to milk it for everything they can right now. Is so obvious, right? But literally, as he buys 25 million or puts the announcement out, oh, I bought for 25 million, price dumps. If you really don't think he's using you guys as exit liquidity, you're crazy. It's either him or someone's paying him and using this news as exit liquidity. So please, again, I'm not this guy. I say that there's a war on your mind, and I really do believe that. It's because cryptocurrency is this whole new thing. There's this whole new aspect and element of social currency that we didn't have before. It's like so easy to buy and sell a cryptocurrency. So it's powerful. If you are an influential character and people believe in you and make investment decisions, you can manipulate the market at will. And if you really don't think they're using that to your advantage, you are crazy. You are crazy. Okay. I'm an optimist naturally, but I also know that people suck. Okay. It's very true. So please, all this bullish news. Remember, in 2017, there was massive bullish news as we went down. There was so much bullish news as we went down, okay? And you need to be able to recognize what's truly bullish and fundamentally bullish versus, what's like fluff news, right? So pay attention to that. I do want to point out some bullish long-term news on chain. So if we look at entity adjusted dormancy flow, basically is the ratio of the current market capitalization and the analyzed dormancy value measured in USD, okay? It can be used to time the market for lows and assess whether the bull market remains relatively normal conditions. It helps confirm if Bitcoin is bullish or bearish in a primary trend. So you can see right here, it's basically at lows that we haven't seen since like a long time ago, December, with the Black Swan event, right? So this is a good indicator to show that there's probably going to be a market reversal. And I do believe this, okay? Just to be clear with you guys, like, if I were to bet, like if somebody put a gun to my head right now and was like, Alex, make a decision now and you can't do anything else, I would put a limit order in at 32K BTC for an altcoin, probably not Bitcoin. I'd probably buy an altcoin. When Bitcoin hits 32K BTC, I'll put it in a limit order and I would let it ride because I do think we're going to have a significant bounce at 30K. And maybe the cycle expands and maybe that happens. But, again, I can't justify it. Nobody has a crystal ball. I'm just telling you what I think. And if we need a bounce at 30K, there's a lot of liquidity at 30K. If there's no bounce at 30K, there will be a bounce. But if it doesn't break the trend, then it's over. The market's going to come down for like 200 days, which is not that bad. It's not the end of the world. 200 days is not a big deal, right? And then eventually we'll buy into the bear run and make ridiculous amounts of money. So again, 30K bounce, I'm leaning towards market continue after 30K bounce. That's what I'm leaning towards, but we'll reevaluate it as we come to that 30K bounce. In other positive news, you see minor net position change. Now, on-chain metrics, I've been talking about it in the past. It's been really bullish. But I think we lose sight to how long it takes for on-chain metrics, right? So like right now we're looking at miners holding more Bitcoin, as you can see the green there. So this is obviously a bullish thing. You know, miners have data that we don't have. Also, they make decisions that we can't make. They've just had a strategic advantage in a lot of cases, and they're right now accumulating Bitcoin. But look how significant they have to, like, look at these big accumulation zones. We're nowhere near there, right? So on-chain metrics, it's a good indicator, but it takes longer than most people expect. It's not an indicator to tell like anything on a weekly time frame or a daily time frame. It's just a good point of reference for investors. Okay, so just take that into consideration. If you're playing it like an investor, that's fine, but just understand you're gonna deal with a lot of volatility, and the on-chain metrics could be like super bullish, and the market still dump. Okay, so just understand that. Also, if we look at exchange net position, same thing's happening. Although we see Bitcoin leaving the exchanges, okay, right here you can see literally Bitcoin leaving the exchanges. We need a significant amount. We need something like this. We need something like a significant amount leaving the exchanges. This is not enough. So although it looks kind of bullish, it's like small bullish, right? And we need something significant on chain. Also, open interest put/call ratio. It looks like more people are putting in puts, which is a good thing because you want people to turn bearish, and then the manipulators will try to get them liquidated. Okay, they're liquidating on both ends. Just to be clear with everybody, they're liquidating shorts and longs. Okay, not just longs. I know a lot of people saying, and including myself, saying, you know, hey, they're trying to stomp out longs. But they're liquidating shorts too. They're just making it volatile in general. So if you're leverage trading, please be please be careful. Just do me that favor. And you know, don't get liquidated, because the worst thing you can do, if you're hodling, at least hold the asset, because at least you get to keep your Bitcoin, and then when the market comes back, you make the money back. But if you get liquidated, you lose the asset, so you literally lose, and no matter what. And it's like the worst thing. It's like the worst of the worst. And this is why I don't leverage trade. But yeah, pay attention. They're taking advantage of that. All right, I want to get into the last subject here, which I think is probably one of the most important. Let's talk about an altcoin that I briefly mentioned in a couple videos ago, but it's on the Fantom network. So I do want to talk about the specific thing that's happening on Fantom right now. As you can see, there is a problem with Fantom. There's not enough validators. As you can see here, there's only 44. So if you look at it, you know, Cardano has 2,000. You know, Solana has 1,000. Ethereum has 300,000 validators. So the reason for it is because it's very expensive. You have to spend about 1.5 million to become a validator. So the Fantom community put up a new governance proposal to lower the self-staked amount required to run a validator node. So you can go vote for it. I'm going to vote for it too. But basically, it looks like they're going to probably drop it to about 100,000 Fantom. Right now, it's about 500,000. So right here, look, 1.5 million. So that would drop it to, I don't know the exact amount, but it looks like maybe like 150K, somewhere around there. Which would allow more people to become validators. Maybe I might do it myself, which will increase the decentralization of Fantom and allow the network congestion to be, processed more effectively. So it'll increase the security, and it'll increase the throughput as well. And I think this is a good thing to fix Fantom, because in this recent dip, Fantom was having its issues. Although I think it's the best layer one besides Ethereum, it did have its issues, and that's just the way it goes, dealing with new technologies. So, but it looks like they're fixing it, and they're very, very productive, is what I'm trying to say. And this is why I follow Fantom a lot. But the altcoin I want to talk about is on Fantom. So this project is by Andre Cronier. He's launching an exchange. And the crazy part about it is he has a very efficient model to where, you know, Uniswap and these other decentralized exchanges are incentivizing liquidity. They incentivize liquidity, but he wants to incentivize, as you can see, fees instead of liquidity. And the beautiful part about that is that it changes the model. And I don't want to dive into extreme details. You can definitely read their blog for yourself. And I talked about it briefly before, but it's just more efficient. It's more efficient. As you can see here, it allows you to have zero slippage trades, or tightly correlated assets built on Fantom. So low cost, zero slippage is a great thing for cryptocurrency, considering the fact there's all these type of sandwich attacks. Okay, I will make a full video on this, but I don't want to understate the innovation that he has created. He has basically switched the whole entire incentive model of DEXs to a more effective incentive model that, you know, gives it to fees instead of liquidity. So basically, if there's a pool that has low liquidity depth, but there's for some reason a lot of trading volume happening, there's a lot of slippage that takes place. So for example, if you want to get into meme coin A, and everybody's trying to jump into meme coin A, but the liquidity is low, right? What he does is he incentivizes the fees, and he'll attract more liquidity, with these fees. So this liquidity, basically the mechanism will recognize meme coin A. Hey, there's a lot of volume happening on this pool. Let's incentivize LPs to come over here with fees. So it makes it super efficient because the LPs make more money by providing liquidity to pool meme coin pool A, right? Because the reason why I say meme coin is because it happens a lot on meme coins. And then, the end user gets a better price when they're trading meme coin A. Right now on Uniswap, they won't get a better price. Okay. So this is basically at the end of the day, net positive for the real people, which is the user. The person that's actually trading should be incentivized to have a better price. And I know a lot of this is very complicated, but you could definitely read the blog for yourself and check out what's going on. And as you look at their Twitter, they're getting a significant following with no product launch, and they're launching soon. And again, I think he has innovated in a decentralized exchange place, and pretty much every single time he has innovated in DeFi, it gets adopted by everybody. There's a reason why they call him the father of DeFi. So yeah, pay attention to that. Using Year in Finance, his original project, which is still one of the best in my personal opinion, generating yield there. I love Fantom, you guys know that. So if the market jumps down, right, or drops down to 30K, it's obvious what I'm buying. I'm buying Fantom type coins and probably his project. That's what I'm buying. So right now I'm like majority out of the market. I'm using trading bots to try to make some money. And we do have a lot of credibility, about 6 months worth of data of us making money in any market. So that's working for me. I'm generating yield with DeFi on Fantom as well as Ethereum mainnet. So I'm still making money, and we have some people in our group that are shorting the market and making money. Last time we talked about shorting the market, I think Marty made a significant amount doing that. So again, pivot yourself in the proper direction of the market, make money on both sides, don't get emotional, understand that there's other variables than diamond handsing. And it just happens to be that the reason why, diamond handsing everything is so popular is because it submits to your cognitive bias. It's literally, you don't have to do anything. Like, what's better than that? I'm going to make money without having to do anything. Count me in, right? People typically go to the things that are easiest. But the people that go to the things that are most painful, like what I'm telling you right now, is that you need to learn how to be an actual successful trader. I'm literally trying to tell people and educate. You need to be better at what you do. That's what I'm trying to say. You need to educate yourself more. You need to trade more, hedge yourself against like the downside risk. And then everybody else is saying, hey, just hold to infinity. You don't have to do nothing. Just watch my videos. That's all you have to do. Just watch my videos, go to work, don't do anything. That's what they're telling you, okay? And again, the people that actually make money and actually understand what's going on move towards pain, okay? If I came to you and was like, hey, you could lose weight by not doing nothing, would you be skeptical? Yes, you would, because it takes effort, diet, hard work to actually lose weight. I'm saying the same thing with money. It's going to be very hard. This is not a get-rich-quick scheme. Although it's the easiest way to probably gain wealth in our generation, it's still not easy, okay? You still got to try, and there's still things that you have to learn, and you're going to have to develop yourself into something that you weren't before to actually make money. So what I'm telling you is the hard path is the best path, okay? And although it might not feel warm and fuzzy inside, it is the truth. And I'm sorry if I lose subscribers for that. But yeah, that's it for this video. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this, guys. Catch you in the next one.